Last Friday, spot gold maintained a weak oscillating trend throughout the day, continuing the sluggish momentum of the collapse in the previous trading days. Although a slight rebound occurred in the early Asian trading sessions, the momentum was extremely insufficient, making it difficult to form an effective breakthrough. Subsequently, it oscillated and pulled back, and finally closed with continued weakness. The long-short game was stalemated throughout the day, with no clear directional guidance formed, and the market panic, although eased, had not completely dissipated. Spot gold fell $39.39, or 0.78%, to close at $4,953.86. The trend of the U.S. dollar index remained the core variable affecting gold prices. The U.S. dollar index maintained strong momentum last week. It fell slightly by 0.2% on February 6th to close at 97.633. Although it pulled back a bit, it still stayed at a relatively high level, continuing to exert obvious pressure on spot gold priced in U.S. dollars. In addition, despite the selling pressure caused by investors' margin issues and concentrated liquidation of metal positions in the previous trading days, after the market experienced the previous collapse, investors were full of cautious sentiment and hesitated to enter the market with buying orders, leading to continued constraints on the rebound momentum of gold prices and making it difficult to reverse the weak pattern. On the geopolitical and data front, market focus was concentrated on the indirect U.S.-Iran talks held in Oman throughout the day. During the talks, although both sides released positive signals of continuing negotiations, there were still obvious differences on key issues such as Iran's nuclear program and U.S. sanctions against Iran. The U.S. side even intensified sanctions against Iran after the talks, resulting in no real easing of regional tensions. At the same time, Russia and Ukraine reached a large-scale prisoner swap agreement, easing local geopolitical tensions and further weakening the support from safe haven buying. Under the superposition of multiple factors, gold prices could not obtain effective support. In addition, the market is still waiting for the U.S. non-farm payroll report, which was delayed to February 11th. Before its release, investors generally chose to wait and see, further reducing market trading volume and exacerbating gold price volatility. Looking ahead, it is necessary to focus on the follow-up progress of the U.S.-Iran talks, the trend of the U.S. dollar index, and the upcoming U.S. non-farm payroll report to be released on February 11th. These factors will jointly determine the direction of short-term gold price trends, and attention should be paid to the risk of further downsides in gold prices. All content is for reference only and does not constitute any investment advice. If you trade based on this content, you should bear your own profits and losses. Please subscribe, like, and share. Thank you for watching.